Hello and welcome to the Thursday, February 27th, 2020 edition of Tesla Daily on Official Tesla Podcast. My name is Rob Maurer. Today we are of course talking about the macro environment, the impact on Tesla stock, but we do still have some other topics with Tesla specifically to go through as well. Tesla stock on the day-to-day did finish down 12.8% to $679. That compared to the Nasdaq down 4.6%. The worst day for the Nasdaq in more than 3,000 days since August of 2011. Since its all-time high close a little more than a week ago, last Wednesday, the Nasdaq has fallen by about 13%. For comparison's sake, Tesla since its all-time high close is down about 24.5%. For further context, Tesla ended January at $650 per share, so we've now fallen to where we were less than a month ago. That being said, the drop is continuing in after hours. We've seen Tesla in the past in healthy macro environments go from, $390 per share to $177. So that's a 55% cut. A similar decline here would put the share price in the $400 to $450 price range. But again, that was in previously pretty strong macro environment. If the macro environment softens further, you could easily see a bigger decrease in Tesla stock price than that 55% cut. Not saying I expect that to happen, but it's important to at least recognize the downside risks. Looking at the macro environment then, obviously these moves are being driven by coronavirus fears. I mentioned this on Monday as well, saying it wasn't something I was terribly concerned over the longer term about, but that it could cause some volatility in the short term. Obviously, we're seeing that volatility now. Whenever I comment on these things, it's important to recognize that that's my own interpretation of the situation at the time. That being said, I would reiterate what I said on Monday. However, what I would add to that is that just because I'm not terribly concerned with it over the longer term doesn't mean that I'm dismissing it. It's obviously worth watching these things very closely, and as with everything we talk about, we need to adapt quickly as we get new information and data. I do my best at it, but it is difficult to find the right balance between being sort of alarmist and being more overly dismissive, and then properly communicating that is even more difficult on top of it. But hey, all of this is difficult. Business is difficult, investing, macroeconomics, psychology, disease, everything that we talk about is difficult. But that's why we have to talk about it and we have to try to learn about it. So sort of an aside, but that's really what I'm trying to do. I'm not trying to give any sort of advice here. I'm just trying to present the information that I have and my interpretation of that information. Hopefully that can be helpful to somebody. If you are really looking for an expert on coronavirus, I am not that person. Absolutely not. Go to cdc.gov, go to other sources. That being said, let's take a quick look here at the latest news and the market's reaction. The virus has continued to spread. There are cases now in nearly 50 countries, the most recent of which is the Netherlands today, with a case in Tilburg specifically, where Tesla actually has their assembly plant. That quick spreading, I think, is what is causing a lot of the pressure in the markets this week, as that obviously reduces the hopes of containment, especially as it spreads to other countries that are less well equipped to handle those containment efforts, which is specifically causing a lot of fear in the Middle East right now. We also have news from Japan today that the Prime Minister has decided to close all schools in Japan for the month of March. In addition to that, England's Chief Medical Officer warned that if the outbreak continues, they could close schools for 2+ months. Things like this could serve as possible foreshadowing for actions by other countries, and you can start to see the economic impact of that. If schools are closed, well, somebody has to watch those kids. Many of those parents will then have to stay home. Thankfully, working remotely is more of an option than it's ever been in the past, so that can mitigate some of the economic impact, but not all of it. But these things add risk into the market. And right now, there's just so much fear of the unknown as it relates to coronavirus. How fast is this going to spread? What's the true infection rate? Are the numbers that we have right now accurate? Are they being underreported? What's the fatality rate? How does that vary by region? How treatable is this? What's the timeline for a vaccination? Is the virus mutating? We just had news today that a woman in Japan has been infected with coronavirus for the second time after shaking it off before. So what are the implications of that? Is there a recurrence rate? And then with all these new countries getting coronavirus, are these countries equipped to handle it? And if they are, what is the economic impact that that's going to cause? All of these questions represent uncertainty. The market hates uncertainty, probably more than actually bad news. Over time, as more information is gathered and more data is collected, one by one, these questions can begin to be answered. And alongside those answers comes a reduction in uncertainty, which I believe allows the market to then stabilize. As it relates specifically to Tesla, I think we've talked a lot about those impacts in terms of uptime to production, either in Gigafactory Shanghai or throughout the supply chain, things like that. So I'm not sure that there's a whole lot more to add there, other than to emphasize the fact that the macro environment sentiment is extremely important. This is why, second only to improving fundamentals, the macro environment was number 2 on my list on the top 10 reasons Tesla stock was crushing it on that episode back in January. The macro always has an influence, especially on a growth stock. Alright, moving on then to Tesla specific news. Just want to go through something quickly here on Model Y as a follow-up to the episode from Tuesday. As we discussed, Tesla sent out invitations to schedule delivery for some performance Model Ys. As a follow-up to that, Tesla has also sent out invitations for some non-performance long-range all-wheel drive Model Y order holders to also schedule delivery in March. So the obvious first question is, why? Does Tesla not have enough performance orders to meet production? And then the second question is, okay, does that mean good news for production or bad news for demand? Personally, I'm not necessarily buying into either end of that argument. I'm not convinced that it's low demand for performance. I think Tesla could probably meet all of their production with performance orders if they decided to. And I'm also not convinced that it's a sign that production is amazing or anything like that either. Because if production was really that crazy, why wouldn't Tesla just start deliveries before mid-March? Why not start them now if production is already sort of up to speed? We also have reports of performance orders who have the 5-seat interior in black that have not received the delivery invitation yet. So there are still a lot of things here that are unclear. It seems like maybe the selection of full self-driving or not may be a differentiating factor. But again, it's unclear. I think the only thing that I can really take away from this right now is that production isn't bad. We know that Tesla sent invites out, regardless of what those configurations are, and they've sent out quite a few of them, meaning they expect to have produced quite a few as well. So yes, I do lean more slightly onto the bullish on production end of this demand versus production spectrum, but again, let me be clear, lest somebody accuse me of talking in circles. I don't think the fact that the long-range, non-performance all-wheel drive invitations went out, to some extent, means that production is so high that Tesla could not just fulfill that production with performance orders. The other clarifying point that I want to make regarding Tuesday's episode, because I've seen some people misinterpret this, which probably means I wasn't clear enough. When we were looking at the production ramp up, and I said if Tesla can produce, 2,500 or so Model Ys this quarter, that gives them a pretty clear path to 100,000 for the year, based on what they accomplished with the Model 3 ramp up. That was not my forecast. That was just a piece of analysis based on what Tesla has previously accomplished to show that they should be able to accomplish something like that again, or set that as the floor and accomplish something even better with Model Y. The point is that even with all of the issues that were involved in the Model 3 production ramp up, in the 3 quarters following the quarter that Tesla produced 2,500 Model 3s, they ended up producing 90,000 Model 3s, again, in those following 3 quarters. If Tesla can do 2,500 Model Ys this quarter, why can't they do 90,000 again over the following 3 quarters? That was my only point. It contextualizes the number that we're about to get here in a few weeks from Tesla on Q1 Model Y production. So hopefully that clarifies those things. And then in terms of these invites, because we are seeing a lot of these go out, I view that as information that increases the odds that maybe production is in the couple thousand to few thousand vehicle range for Model Y for the quarter, but we will see soon. Next up today, I wanted to talk about the Panasonic news from Gigafactory 2 in Buffalo. Panasonic in a statement yesterday saying, quote, Panasonic Corporation will begin to wind down U.S. production of photovoltaic cells and modules at Gigafactory New York and Buffalo, New York, in line with the global solar strategy led by its Life Solutions company. By the end of May 2020, Panasonic will cease U.S. solar manufacturing operations and is scheduled to exit the facility by the end of September 2020, end quote. Panasonic also adds, quote, according to Tesla, this does not impact Tesla's future solar growth business plans, end quote. They also make sure to state that it will not impact their battery partnership. One ever-present question around Gigafactory Buffalo is whether or not Tesla will be able to meet their job requirements with the state that they have agreed to. And according to the New York State Development Chair, quote, Tesla informed us that they have not only met, but exceeded their next hiring commitment in Buffalo. As of today, Tesla said they have more than 1,500 jobs in Buffalo and more than 300 across New York State, end quote. Also adding, quote, this count does not include the Panasonic positions, and while their operations were co-located at Riverbend, there was no incentive package between the state and Panasonic. We understand that Panasonic has made a corporate decision to move away from global solar products, but this action has no bearing on Tesla's current operations nor its commitment to Buffalo and New York State, according to Tesla, end quote. My guess on all of this is it's probably been a long time coming. We've known for a while that Tesla has been buying non-Panasonic solar cells from foreign manufacturers. And while I'm not sure how involved or uninvolved Panasonic is or was in the solar roof project, the progress there over the last couple of years has obviously been a little bit slower than what Tesla originally would have hoped. And I'm sure all of this has caused a lot of reevaluation to happen in the solar business, both for Tesla and for Panasonic over these last few months, especially as that side of the business has come back in focus with resources freed up from the Model 3 ramp. If all of this has sort of been in the works for some period of time, I think it's a good thing that this company talk that Elon alluded to will be happening at Gigafactory Buffalo in April. And Elon specifically talked about tours during that period of time, so I think that can alleviate some of the concerns that this news might bring to mind. So we'll have to see how this develops. Next up today are 3 other quick stories that I want to hit on quickly. The first is Gigafactory Berlin. The mayor of the municipality that Gigafactory Berlin is located in said in a translated quote, "It could be said that the end of March is the first groundbreaking ceremony," end quote. So an exciting update there. Next is an energy storage project, which we'll probably go into a little bit more detail on in the future because this is a pretty big deal. But in California, the Monterey County Planning Commission approved a joint project between Tesla and PG&E for a 730 megawatt hour energy storage facility. Construction on this is expected to begin in March, and the project is supposed to be completed by the end of the year. There's also potential that that storage capacity could expand above the 730 megawatt hour level. The last quick thing for today is an update on short interest. The numbers came out after market close yesterday, and short interest was down to 18.4 million shares as of the February 14th settlement date, which was down from the 22.8 million shares shorted as of January 31st. So this is a significant decline, 19% over that 2-week period of time. More precisely, 19.2%, which is actually the second largest percentage decline we have seen over a 2-week period of time in Tesla's history. It is only narrowly edged out by a 19.3% decline over one period back in May of 2013. So I guess well-deserved tip of the cap for those of you that were echoing more short squeeze type of situation. I'll still say short covering rally, but as I said at that time, it did feel like the squeeziest period of time, and the data does support that idea here. While the 4.4 million shares that were covered, we have seen numbers like that in the past, the percentage off of this lower base now is definitely significant. So that will wrap it up for today. Tomorrow we should have the Pierre Ferragu interview coming out, so look forward to that. As always, thank you for listening. Don't forget to follow me on Twitter at Tesla Podcast. And if you want to support the podcast, you can learn more about doing that at patreon.com/Tesla Daily Podcast. Don't forget to subscribe, and I'll see you tomorrow for the February 28th episode of Tesla Daily. Thank you.